Hey guys, what's up? Yeah, I think the stream started. I'm hopefully confident that it has started. Again, hi, how are you guys? What's up? Sorry, I had to just go freshen up before I started the stream. Now, in this episode, what we're going to do today, what we will look at today, see, every day I take some feedback from you guys. I take some feedback from my 4:30 sessions and ask you guys what needs to be done. And I think today was the same thing. I went on the Avalon Scenes app. I did the session at 4:30, which is market talk. Then I asked you guys what episode to be done today, and you guys said, can you please teach us how to read a company's financials and how to do it quickly, how to understand how a company's financials can be read from a very quick format online. Now, you know that when the company issues financials, you don't know whether it's good or bad. What we usually do is we go to Economic Times or we go to Money Control, we read that entire article that says, Bharti Airtel new result has come out, it beats street estimates. So that's great. But you don't know what street estimate is, and you don't know how to actually read that entire, you don't know how to read that entire quarterly report or the annual report as well. So what I'm going to teach you today is how to quickly go through the financials of a company and then figure out whether it's a good thing or a bad thing. Okay, that is what we're going to do today. So let me open a few things for you guys. Let me go to yeah. Okay. So this is a basic website that we will go through first, which is just screener.in. You can go through Screener to figure out a lot of things in the market, especially with respect to how to analyze company data a lot. Now, there's a problem here that sometimes the data in Screener is slightly outdated. It might not be great, but nevertheless, it is good to always cross-check. But I'll show you both formats. Now, you might say that, okay, you know what, Screener is something that Shashank is using, but I like other platforms. Yes, there are different platforms. You can go through Ticker Tape. You can go through Grow has their own integration of this as well. You can go through Zerodha's integration with through Ticker Tape. You can go through anything that gives you data. You can even go through Trendline that gives you some kind of information as well. Again, we don't care about that too much. We will only look at how to understand and how to read company financials very quickly. Okay. Now, first thing, let's take a company. Let's figure out any kind of company that we can do. And I want to make this an interactive process. So I'm going to ask the chat, you guys suggest some company names and we'll do a quick analysis of the company. Try to do a company analysis of something that is a good company, like something like a large cap company. So it's easy for you to figure out whether it's a good company or a bad company. So I'm going to ask the chat for some name suggestions on a company, and then I'll show you quickly how to read a company's financials. Okay, till then I'm just going to have a sip of water. What background music? Okay, Tata Motors, people are saying Bharti Airtel, people are saying Subex, Happiest Minds. Okay, Happiest Minds is also good. Tata Motors again, Tata Power, Airtel, BEL, Subex. Okay, let's do one thing. Let's take Happiest Minds. A lot of people want to know. So now every industry, first of all, understand this that when you read companies' financials, every industry is slightly different compared to the old industry. Okay, every industry is slightly different. Now, if you look at the tech industry, obviously it's completely dependent on tech. So if a company is completely dependent on tech, then the margins are much better when it comes to a tech company as compared to say another company. Whereas in banking, it's slightly different. Now let's look at Happiest Minds first. Like as a lot of people said Happiest Minds, let's look at Happiest Minds first. Okay, so this is Happiest Minds. Can you guys see this? Okay, this is Happiest Minds. Okay, spam OP on the chat. Guys, I'm going to do Happiest Minds. You can stop spamming. Now, Happiest Minds, let's look at the quick data. How I would usually understand or how I would read a company, whether it is good or bad. This is how I would do it. And I'll run you through the process of Happiest Minds. Okay. Now, I first check the market cap. Market cap is 10,900 crores. Why do I check market cap? Because I want to see whether this company can go much more than this. See, everything does not, the entire company's value and price does not depend on the current price. It depends on the market cap. Okay, it does not depend on the current price. So I need to look at, okay, if it is a 10,000 crore market cap company, how much can it go more to become much better? So can it go to a 30,000 crore company or can it go to 50,000 crore company, right? If it goes to a 50,000 crore company, then is it better or not? So that is something that I usually look at. Let me try zooming in a bit so that some people can see it as well. Okay, just give me one sec. one second. Yeah. Okay. So 10,000 crore market cap company means there is scope for improvement. There is scope for it to go up even more. Now, if you look at the current price, it is at 748 rupees. Now, you can look at this either on screener or you can also look at it from money control as well. You can do either or. Okay. Now, if you look at the stock PE, the stock PE says it is at 67.9. Now we don't know whether 67.9 is good or 67.9 is bad. So there's another way to check that out. The other way to check that out, how I usually check, is go to money control. Okay, go to money control and do the same thing. Type happiest minds on money control. I'll show you this. I'll show you where to find industry PE. Now you come down here and you see this sector PE. So the sector PE is currently trading at 34.94. Okay. Sector P is trading at 34.94. But if you look at the current P ratio of this company, it's trading at 67.64. Now, is this an assumption that this company is overvalued? We don't know. We can't say. Okay, we will find out. We will definitely, there are ways to find out. But we will figure out whether this is good or bad. So this is sector P is at 34, but currently happiest mind is at 67. So a lot of people might say, you know what, it might be overvalued. I'm going to wait for it to come down and then I'll buy more. Possible. But again, let's look at it from a different angle. Now, another important thing to look at is ROE and ROCE. If you don't know what these things are, please go on Google and figure out what ROE and ROCE is. ROE is return on capital and ROCE is return on capital employed. ROE is return on equity and this is return on capital employed, ROCE. Now, the higher this is, the better it is for you. Higher it is, the better it is for you. So I'm saying, okay, ROE is 39.9%. That is great. ROCE is 35.1. That is also good enough, not an issue. But let me see, the main thing I always look at is the yearly trend or the chart trend. Okay. Now, if you look, sadly, this company just IPO'd now, so there's no long-term history on this stock. But if you look at it, it has gone up after the IPO when it launched in September at 358. September se leke February tak it was at 350. It did not move for 4-5 months. Immediately after that, you see how it shot up. Now, in screener, there is also another chart right here known as PE ratio. Okay, this is a price chart. There's next to price chart, there's a P ratio chart. Click on this. Now, P ratio chart usually shows what is the average P ratio of a particular company and how it keeps fluctuating, whether it's overvalued or undervalued. Now, to make it more simpler, because this does not have history, let me show you some other stock like say ITC that has been there from a very long period of time. Now, see how ITC is up and down. You don't know when it is good. Click on P ratio and you will see right now that when this is the median P ratio, the gray line in the middle, the median P ratio right now is somewhere around 32, but ITC is trading at 19.7. This would say that ITC is slightly undervalued. See, whenever it went overvalued, if you look at here in Jan 2017, the P ratio was 39. It immediately had to come down and start correcting to the 30 level. There's a gray line. I don't know whether you guys can see it, but there's a gray line here. So this is the median. But after 2019, it has just gone into undervalued zone. So currently, if you look at it, ITC is undervalued. But that's how you look at it from a P ratio perspective. Is something overvalued or is something undervalued? Now, okay, let me show you other stuff. Now, if you look at here, it shows you the peer comparison. We don't care about that. Let's go directly into the quarterly results and the yearly financials. Now, I'm going to teach you, pay close attention. I'm going to zoom in a little bit. Pay close attention. I'm going to teach you how to quickly read whether a company is good or bad. Okay, there's going to be a quick reading of a company, whether it is good or bad. First and foremost, we all care about only one thing, that is the revenue that the company is making. The company has to keep making revenue, not thoda bahut revenue. The company has to make more and more revenue. If the company is making less revenue, I don't care, right? If the company is making same revenue, I still don't care. But if the company is making more and more revenue, that is when I say, good job. You know, this company is awesome. Now, if you look at this, let's look at the sales. The sales of this company, 175, 172, and this is a quarter on quarter result. Okay, so I'm just looking at quarter on quarter result. Now, September, December, March, June, September, December, March. Okay, last year and this year. If you look at how the sales are increasing, 175, 172, 186, 177, 183, till here no raise, till here nothing's going up. Quarter on quarter it is, udhar hi hai, matlab itna khas nahi hai. Right? Nothing great, I would say. But then suddenly here it became 193 and then it became 208. Okay, this is good. This is fine. So first thing I always check is sales, whether the sales is consistently growing or not. Clearly here the sales doesn't seem like it is consistently growing. So let us see more deep analysis, and I'll show you how it looks if a company is consistently growing also. Then you look at expenses. Now the basic thing I look at expenses is that jump nahi hona chahiye. Okay, if the revenue jump, expenses should jump in the same ratio. I'll tell you how. In September 2019, the expenses was the sales was 175 crores and the expenses was 147. Fine, you understood this ratio, correct? Again in December 2019, the sales was 172, but the expense was 147 only. Same ratio, perfect. But look at the next quarter. Next quarter, the sales went up slightly to 186, but the expenses went up massively from 147 crores to 165 crores. Means it's a big jump. It's a big jump in expenses. Now click on that and you see why it is so big. It's saying employee cost went up slightly in that year, or maybe something else went up in that year. Now this is direct cost. Okay, this is direct cost. Now, again, if you see the next few years, it's come down to 140, 139 and 142. That is good. Now, this is something that you look at from a quarterly angle. Now, leave quarterly. Let's go down directly to the yearly. Okay, this is the yearly, how it looks from a yearly angle. Now, understand this basic thing, that if you feel that you have to get return on your investment, if you have to make money on your investment, that means the company has to constantly keep growing. If the company is not growing, you will not make money whatever happens. So the company needs to grow. So my only agenda when I look at the financials is this company growing? Okay, now let's look at this. From 2012, okay, to 2021 March, let's see how the company has grown. I usually look at only last 5 years. That's more than enough, because uske pehle kya kiya, I don't care so much. Last 5 years, is there a growth or not? So let's check it out. Last 5 years would be 21, 20, 19, 18, 17. Okay, we can even take 16 if you want. Now let's look at the sales growth. 341, 431 growth, 434 not a big growth, no growth almost. 590 very good growth, 698 amazing growth, 761 growth, good growth. So if you see year on year, the company is growing quite fast. So that means not very, very fast, but the company is growing fast. So that's not a problem. Then you come to the most important thing, which is operating profit. Operating profit basically means sales minus expenses operating profit. Now, if you look at the last 5 years, their operating profit last in 2019 was 59, in 2020 was 99, and now it is 190. Now, the better this is, the better the lower bottom half becomes. And I'll tell you how. Okay, if the sales go up and the expenses are slightly low, you make a profit of say 59 crores they made in 2019. Then they're saying other income was there minus 19. Actually, this is not a good year because minus 19 you shouldn't add. Let's leave 2019, go to 2020, last year. Last year, they made 99 crores operating profit at an operating profit margin of 14%. Now, OPM is very important because the better the margin, the better your results become. So if you look at operating profit, it is 99 crores. Other income is 5, so it becomes little more. Then interest basically means it is the loan that is given. So they've taken loan. This is their EMI, that they have to keep paying interest every year. So that means if they're only paying 8 crores interest every year, I can automatically look at this and say, you know what, they don't have so much debt. They don't have so much loan. It is a very less loan company. They don't have so much loan in this. So only 8 crores. They're making 698 crores and they're paying only 8 crores interest a year. So not bad at all. Depreciation, okay, remove all that. Profit before tax, 75. The tax rate here, look at this. This is very important. Happiest Mind has only paid 3% tax rate. So this you need to understand why. If you pay less tax rate on that year for some particular reason with respect to accounting standards, then the next year you would have to end up paying slightly more. You're just postponing the tax. And next year you see he's paid 13% tax. So that's quite high. From 3% he's paid 13% tax. But that doesn't matter. Come to profit before tax, which is 75, and then profit after tax is 73. That means his EPS, which is earnings per share, should be good. If you look at 2021, his operating profit margin went up by 25%. What this basically means is my sales is going up, but my expenses are not going up so much. Okay. So if you look at the sales jump, it is almost 70 crores that he's jumped from 2020 to 2021, but his expenses have gone down from 599 to 571. It's gone down. So he's made more money with less expense. That's a good sign. So his operating profit margin is up. 190 crores he's made. Profit after tax, totally everything, cut put ke, it's come up to 162. And his EPS is 11.03. Now, EPS is the most important thing for me and you to understand, because EPS is what basically it says about the company, that whether the EPS is growing, earnings per share. If I have a share, is the earnings per share going up? Now, what industry people do, I'll tell you, is they take this EPS, okay, and multiply it by sector PE. Okay, let me go to sector PE. Sector PE is what? 34.39, 34.94, and the EPS is 11.03. So let me show you this, right? Why is it opening in Yahoo? Okay, fine. 34.94, basically 34.94 into what is the EPS? 11.03. Okay, into 11.03 is equal to 385. So according to the P ratio, according to the sector P ratio, Happiest Minds should be trading at around 385 rupees and not 748. That is why you see that the P ratio right now is at 67.9. Now, again, is this valued? Is it overvalued? Might be overvalued. Might highly possibly be overvalued. But if it is a good company and there is a lot of growth projections with a particular company, it tends to be overvalued and it is completely fine. Okay. Now, let me go down. You understood how to see the profit and loss account. It is quite simple, quite easy. We just look at the same sales. Okay, I'm reiterating it. We look at sales quickly. Then we look at operating profit margin. Is the margin growing? Then we look at interest. Interest is basically your loan. Jada interest hai to matlab loan jada hai to company is not very good. And then you go down to EPS and see if the EPS growth is there. Okay, now I'll show you a similar company. This was Happiest Minds, so quickly how to read it. But I'll show you another company, that how does a fast growing company look like. Let me show you Laurus Labs. Okay, this I'm going to show you how a fast growing company looks like. This is Laurus Labs. Now, if you look at Laurus Labs, they have a market cap of 25,849 crores. Current price is 480 rupees. Price to earning ratio is 26.3, but I don't know if this is the sector P. So I will go back to money control and I will write Laurus Labs. And I will see what the sector P is. See, the sector P is 41.85, but Laurus Labs is trading at 26.21. That means it has a potential. If it has to just become how the sector average is, it needs to go up much more. Okay, the EPS is 18. So ideally it should be 18.33 into 47.85. Okay, so if you look at this, it is 18.33 into, what is that? 41.85. 41.85. This should be the price of Laurus Labs actually. If it had to trade the sector P, Laurus Labs should currently be trading at 767. It's trading at 480. But again, there are a lot of reasons why a sector leader would trade at a higher premium. That's because Laurus Labs has a little bit of debt. They have a lot of loan also. Now let's look at how a chart of a fast growing company looks. Let's look at Laurus Labs and see how the company is growing. Now, if you look at the 1 year chart, you can clearly see a significant growth. Okay, last year it was at 18th May, it was at 85 rupees, and 18th May today it is at 480 rupees. You guys can do the math on how much it has grown. Okay, if you look at the 5 year chart, look at this. It has not grown at all in the last 5 years, but suddenly after this point, March 2020, apna COVID ke baad, with the hype of the pharma sector, it just shot up and came into the limelight, and it has gone up quite drastically. Now let's look at why also it has gone up, and let's look at why it is good. Now let's look at profit and loss. Now see this profit and loss, guys. I will show you how the sales are growing so consistently and so rapidly, and that is why you will see the exact same correlation in the stock as well. In last 5 years, let's go back to 2016. 1,700 crores, 1,900 crores, 2,000 crores, 2,200 crores, 2,800 crores, and directly after 2,800 crores, it has gone up to 4,800 crores. Can you see this jump? Do you see this jump? Insane jump. Okay, insane jump. From 2,800 to 4,800 is a massive jump. And that is why, because of this jump, you will see that the entire market is also jumping. Okay, that because of this jump, you will see why the entire stock price also keeps jumping. This is why the main reason is. Now, let's look at the directly. I don't care about expenses so much. I'm going to look at any anomalies, right? Any big numbers coming up, I'm going to look at operating profit margin. You don't need to look at numbers. I can look at operating profit margin. Now see this, 20%, okay, very good. 21% next year, good, you're still maintaining your ratio. 2018, 20%, chalo, acha hai. 2019 में 16%, right? Why did this go down? That means something has gone up. What has gone up? Expenses has gone up. Okay, it has come down to 16%. So let me click on expenses and see what expenses went up. This is slightly, this is how you do investigation. Now, if you look at the costs here, let me compare the cost last year versus this year. What has happened is their material cost has gone up from 51% to 53%. Okay, you see how percentages work. And their other cost has gone up from 4% to 6.3%. That has actually hit the final operating profit margin. So why has the material cost gone up from 51 to 53%? Right? That means something was wrong. And also their sales didn't go up so much, but the material cost went up. So that something was not right here. That is how you understand. Okay, green screen is gone. It's okay. It's completely fine, guys. It's okay. Unless you want me to fix it. Okay, wait. Let me try fixing it. Doesn't matter, but just give me one sec. This green screen on OBS is slightly weird. Is it back? Is it back? VFX. Yeah, it's like VFX only actually. Let me check if it's back. Is it back, guys? Flow टूट जाता है थोड़ा. When you do this, no, with all these stupid green screen, you actually lose focus and flow. Yeah. That's fine. Don't worry too much about the background. Understand how the finer details work. Okay. Where was I? Yeah. So it's very important to understand how the operating profit margin looks like. Now you see this, that it was 16% in 2019, it is 20% in 2020, and now it is 32% in 2021. Now, do you think this is a healthy jump? Right? Our job is not to be biased. Our job is to look at numbers and ask questions like why. So I will ask Shashank, why is this 16% become 20%, which is 20% normal? I understand. Past 5 years, your average is at 20%, so I understand. But why is it suddenly now at 32%, Shashank? Can you please explain why is it at 32%? Now, this calls for investigation. Now, how can a company, and I want to ask the chat as well, how can a company's operating profit margin go up by 12%? Quite drastically. The sales has gone up almost double, but how can the operating profit margin go up quite drastically by 12%? Can anyone tell me? From 20%, it has gone up to 32%. So I want to check now how many people are smart and how many people can understand why it has gone up. Tell me. I just realized there's a massive delay in what I'm actually teaching and showing versus what is actually, because I'm waiting for a long time for the answers to come. But yeah, that's fine. Tell me. Price increase. So I'm getting a lot of people commenting saying price increase, demand for product increased, price of product increased. They use their unutilized resources, slower growth of expenses, hike. Okay. चलो मैं बता देता हूँ. Let me open this expenses list. Can you tell me, if you look at this, can you tell me what has gone down significantly? Right, this is just very weird. Okay, but I'm not going to look at this. But the manufacturing cost has gone down from 11% to 0% here. Now, I don't know how true this is. I don't think that is true. But I know what happened in this past 1 year. I know what happened from 2020 to 2021. What they had done is, now this is very important, guys. Lotus Labs as a company did a lot of investment from their past profits. They invested more into big manufacturing units and kept building their manufacturing. Now, what happens when you build more factories? You have something known as economies of scale. So the same thing I can do in bulk now. So obviously my selling price is more anyway. I'm selling more volume, but now my cost per that unit is very less now. So that is makes it an advantage. So if I have more manufacturing, I don't have to import. I don't have to ask other people saying, you know what, hello, give me some products. I'm going to pay you some margin. All that is not there. मैं खुद का बनाता हूँ और खुद बेचता हूँ. Okay, it's like that. It's like I have my own cows and I have my own milk and I'm selling my own butter. It's a very stupid example, but basically I'm not importing or renting it or taking some material from other people. So that is what happens. So manufacturing, they had their own, and it takes time. It's not like मैं आज उठ के बोला चलो I'm going to open one manufacturing unit. It takes 1 year, maybe 2 years, depends on people, how they do it. So these guys were investing from a very long period of time. And any company early on in their life, if they're investing to increase their manufacturing capacity, that means it is a good sign. But again, you have to depend on whether the growth is there or not. फुकट का मैं अगर एक मैन्युफैक्चरिंग यूनिट लगा दिया and tomorrow I have no sales, then I'm in loss because I have to pay loan no on that amount. So that is how it is. Okay. Now, if you look at how now see another thing, all this is fine. We look at interest, look at the interest. Interest is 68 crores that they have paid, but they're making 4,800 crores. So I'm like, okay, you know what? This is negligible compared to the amount of money they're making operating profit. Their operating profit is 1511 crores and their entire interest rate is 68 crores. So that is fine. I'm like, okay, that's completely all right. Now, look at the main thing, guys. Look at the main thing, which is EPS jump. 1.76 in 2019, 4.77 in 2020, and 18.33 in 2021. That is a jump of around 4 times. So the stock price has to go up minimum 4 times. That is how it looks like, right? Minimum 4 times it has gone up. Now, your question is, a lot of people are asking me on the chat is that how would we know it is a manufacturing cost, or how would we know what it was? Now, I'll tell you what. As soon as you see something like this, some jump like this, start doing research. Now, I know this company, so I've done the research. If I didn't know this company, my next step would be to Google Lotus Labs and find out why it is going up. My next step would be to go to Trendline and look at the research reports that are there on Lotus Labs. My next step would be to go to Lotus Labs website and look at the investor presentation of Lotus Labs. I would go through the annual report and then figure out why did their margin go up so much? Are they doing something else? Why is there something new that they've launched? That is what I do, right? That is how I figure out whether it is good or whether it is bad. Okay. Now this is from you look at it from a, what do you call it? Profit and loss statement account, right? Now I will show you what a balance sheet actually I want to split this into the next episode. I'm going to show you balance sheet and cash flow in the next coming episode, right? Because if I do too much today, you guys, it will become a bit too much for you guys as well. But the simple thing is, if you look at a profit and loss account, how you need to read it is look at the sales. It has to keep growing. This is for a good company. Now the sales has to be growing. The operating profit margin has to be growing as well. The interest has to be low. Okay. So if you look at the interest is kept coming down, that means the loan is being cleared a lot, and the net profit should be high. This is what I look at in a good stock, only from a profit and loss account statement. Okay. This is only from a profit and loss account statement. Now, if we know these parameters, and you'll be like, Shashank, you know what? I know some of these parameters. How do I find? I can just start finding good stocks easily, right? And that is a possibility, right? You can find good stocks easily that way. So on Screener or any kind of screener that you have, you can actually go create a new screen and you can put in some screener stuff like this, right? Firstly, I would say, you know what? I want a market capitalization company of more than 500 crores. Okay, 500 crores means the company's net worth is more than 500 crores, because I don't want something that is smaller than 500 crores. Then I want to say that quarter on quarter, okay, look at this. Quarter on quarter sales growth, year on year quarterly sales growth is there, and year on year profit growth is there. I want a company that is growing sales growth and quarter on quarter, right? So first I will do sales growth in the last 5 years, or maybe let's look at last 3 years. I want my sales growth in the last 3 years to be more than 25%. Okay, let's see. Sales growth in the last 3 years has to be, I'm showing you how to actually find a good stock. Sales growth in the last 3 years is greater than 25%. Then I'm going to say debt to equity ratio. Okay, basically I don't want my debt to be very high. I want the debt to be low. So I want it to be debt to equity ratio less than 0.5. Okay, just do this. It's very simple. Then I want my ROE, return on equity. I want it should be greater than 15%. Okay, I want return on equity greater than 15%. And what else? Is there anything important? Sales. Oh, okay, operating profit margin. I want a company that works on very good because sales growth acha hua, but operating profit margin is bad. I don't care about it so much. So I'm going to say, you know what? I want OPM. Remember we saw OPM. I want OPM greater than at least 15%. This is what I'm looking at. Show me all the stocks in this and see how it opens up everything here. These are all the stocks that fit in my category. Now, what I do next, okay, this is how I do a basic search. What I do next is I go through each of these stocks. There's not much, there's only 18 stocks here, but I go through each of them and you look at some of the stocks that are there. IOL Chemicals, we've heard was good in the past. Mangalam Organics, Valiant Organics, Alkyl Amines, the one that kept going up right now recently. Deepak Nitrite is also here. Bharat Rasayan is here. Mastec. All so many good stocks are here for you to explore. Solara, Gland Pharma, all these are good. Now, if you say, you know what, this is too strict for me, the parameters, I want it slightly more. What you can do is you can say, you know what, sales growth, I don't want 25%, I can make it 15% sales growth. Okay, just make it 15%. And operating profit, I'm okay with 13% also. And maybe ROE, I'm okay with 10. Again, if you want to figure out, so you'll get more stocks. Vibhav Global, which is you get all the tech companies coming into this, and you go through them one by one to figure out. It is a time consuming process, very time consuming process, but you need to do this once and then it is worth it. Understood? Awesome. Okay. Now, one second. Let me go back to main screen. Okay. So guys, I hope you guys understood now a basic thing on how to read the company's financials with respect to the profit and loss, how to make sense of market cap, how to make sense of P ratio, how to quickly figure out from what we have learned right now, how to quickly figure out how to screen some good companies also, right? I found out how to screen some good companies. Now, I don't want to do too much in one episode because then it would slightly get little annoying. But what I will do is next episode, I will show you the same company's balance sheet. I will show you how the balance sheet looks like for this company. Next, I will also show you how to read cash flows because cash flow is also so important. Everyone looks at profit and loss and balance sheet. I look at cash flow more than anything else because I want to know where the money is going through. And what I'll do is I'll find one bad company also. I'll find a bad company and show you how a bad company looks like. Because when you invest tomorrow, you should exactly know this is how a good company should be, this is how a medium company should be, and this is how a bad company should be. Okay? I hope that helped you guys understand a lot of things with respect to company financials. It is not complicated. Trust me, people would think it is difficult. It is not that difficult. It's not complicated. So don't worry too much about it. Also, next week I will do, it's very important, next week the 1,000 rupees small case, I'm going to change something next week. So I will do that also and show you in the next week episode also. Okay, so the 1,000, only for the 1,001, because the 5,000 and 30,000 review already happened in the last episode. So the 1,001, I will show it to you in the next one. So all the people are holding 1,000. It is very important for you guys to watch. I'm basically changing Bharti Airtel into a new stock. When will the small case review be there? People are asking. Guys, it has already come out. The latest small case was the health insurance video. You can check in this channel itself. In the second half, I have done the small case review for this month. So you can please go check that out for all the people who missed it. Okay. So again, hope you guys like this episode. Hope this was fascinating. Vivek Kumar is asking me, why should we follow you? What is your qualification? Nothing, man. I'm just a guy who keeps trying to teach people about finance. And I hope you guys are learning something or the other. I'm trying to keep it as simple and as basic as possible. So if you liked it, I can only see 115 likes, which is very disappointing. Please click on the like button. That's the only thing I go by, though. I don't like views and stuff like that. I only like likes. Okay. Yeah. So I think that's it. I hope you guys like this. And in the next one, I will do, next episode, I will do two things. I will do balance sheet and cash flow. And I will also do the 1,000 small case review, two things. And if you want to interact with me more, I do this for all the people who don't know. I do this session on the Avalon Scenes app, okay, at 4:30 p.m. every day on a market day, not on Sundays and not on market holidays. And I talk about the important news that are there in the market. So if you want to see that, I think the links will be below. You can click on the link, download the app and meet me tomorrow. I think I'm going to come there at 4:30 and you will see me at 4:30 there. And I also take a few people and ask questions. So thank you guys. See you later and have a great day. Bye.